All right, friends and family and kiddos. It is the first live session I've done in about a year. And then, in part of this first live session, to be a super, super warm welcome back, I'll be taking questions from clients, doing analysis, sharing my insights, stuff like that. We have one of the best questions that have ever been asked in Mission FX history about to be asked right now. It is from one of my clients and good friends named Rob from England. Rob, we are sitting here very eagerly, every single one of us here on this call, awaiting your beautiful question. So ask, Rob. This is the time where history will be written. Ask me your question.
Okay. So, uh, there's a trade spin. A trade looks good. For example, I don't know, Euro GBP right now. Well, I thought it looked like it was going to be good. And then it kind of gets to the zone, you enter, and it goes back and forth and back and forth and back and forth and back and forth like that. And you enter and you close at break even, you enter and you close at break even, you keep thinking it's going to go down. If it leaves the zone and you still think it's going to continue down, would you say you've missed, like, obviously it depends on how far, but is there a context where the trade is inopportune but still kind of good to trade? And what do you do in that situation? Where it kind of goes back and forth, and then it looks okay, actually now it looks like it's going to go down.
Yeah. So give an example to kind of just trace over everything you said. So what is a good trade, right? Well, I mean, here from the way I do things, right? Price comes into a major support resistance zone on the daily time frame, daily, weekly, right? It's just a major zone where prices had nice bounces over and over. And what Rob said is it gets there, but then you enter, but instead of it going right into profit, it kind of fucks around and goes back and forth. So you might have situations like, for example, last week where I entered here and then it went into profit, then it pulled back and I entered another trade, was waiting for a break lower, then it fails to get past the lows, and instead it just starts coming back to the upside. And as it was coming up, I closed these two positions I was in at a net break even, and now price is going sideways here. So Rob's saying like maybe you take more positions in here, like you take a sell up here, and then it goes down into profit, but then it comes all the way back up, and you think it might be breaking out, so then you close that at break even. And so you're kind of wondering, like, okay, shit, like, what do I do? Like, it looks decent, but I've closed at break even like once or twice or three times. And then what he's saying is like, okay, let's say something like this happens where it quote unquote looks good again, right? It looks like, okay, now's the time. The last two, three, four, five, six, 17 times haven't been good, but now it's good. It's going for sure, bro. It's going to drop. So you're thinking like, okay, price might be breaking through the zone. What the fuck do you do? Here's how I approach it. About 80% of the time, I just won't take a trade. And the reason is because it hinges upon the idea that if price is going to move into profit, well, by God, I'm not even religious. I'm an atheist, but by God, it is going to move into profit, right? You're going to get into a trade, and the best trades you enter, and then right after you enter, they start moving into profit, and they just go right. They don't fuck around. They don't go sideways. They don't pull back. They don't test your patience. They don't challenge your masculinity. They don't call out your testosterone levels, Rob. They just go straight into profit. They're not a pain in the ass. So 80% of the time, I will not do anything. I will just let it go, and if it goes, I will flip off the chart and then I will curse passive aggressively under my breath. And then I'll just smile and just tell people and just gaslight people when they say, bro, Euro GBP worked out. And I'll just say, oh, what are you talking about, bro? Euro GBP wasn't a good trade. And they'll be like, but it was at the resistance zone. And I'll be like, no, 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 no. And then I'll just gaslight them. I'll just be manipulative and say, dude, no, price action, the context, man, the discretion of the discernment of the price moving sideways at the zone and institutions coming in at that zone, trying to paint retail buy side liquidity. I'll just gaslight the fuck out of people. But it's really hinges upon the idea that, like, look, if it was going to work out and you've got an entry like at the zone, that is the make it or break it point. That is the point where it is either going to bounce or not. That's why we don't enter trades like, below the zones, right? We don't wait for it to get there, then bounce away, and then fucking enter like after it's already gone away from the zone. The idea is that it's either going to bounce or it's not. And if it's going to bounce, it's going to do it relatively quickly, right? It's not going to take a month or two. It's within the first day or two, sometimes a couple days, it'll start moving into profit. Your trade duration will be under a week to sometimes like maybe 2 weeks. So that's 80% of the time. Now, 20% of the time, Rob, this is the exciting part, right? This is the part that you and probably everyone else on the call is waiting for. What the fuck does Nick do the other 20% of the time? Rob, I'm going to stop screen sharing. I'm going to look you in the eyes, Rob, all the way from across the pond here in Texas, all the way to England. I will tell you, sometimes I start beating my chest like a chimpanzee and I just fucking ape in anyway. I just do it, but I do it under only specific criteria in certain contexts. Here's what I do. So if I was going to still enter this trade and just say, like, you know what? fuck this pair. I'm getting back at Euro GBP. This is totally just revenge trading, FOMO bullshit. Then what I'll do is sure, I'll enter it, but the position sizing will be much smaller, meaning the risk on the trade is just going to be set lower, given the quality of the trade. A more high quality trade is entering here at the resistance zone, stop loss above, target down here at 1 to 1, right? This is the way, it's probably best set up. Your entry is somewhere towards like at least the middle of the zone, if not a little bit higher up into the zone. So, you don't want to be like entering shit down here because then your stop has to get wider, target gets longer, the trade duration's longer. It's just bullshit. But if you're entering here in the zone, right, and I think it's a high quality trade that's likely to bounce, I'll risk a high dollar amount, as indicated by this trade where I risked 50K in the first entry and another 50K in the second entry. I was risking, I don't think it was 100K. I think it was like 80K, right? So I was risking 80K on this in total because I thought it was a very high quality trading opportunity with a clearly defined support resistance level. Now, though I would risk 50K or in that case 80K in total on those trades, if price then comes down here and then I'm entering after it started actually moving from the zone, well, guess what? My stop still has to be above the zone. Now the fucking target has to be like a little bit further down here, which is not completely unreasonable. When you go to the daily, most of the bounces away from the zone have been like this, right? They've been like nice and far. What is this right here? This is like 81 pips. This might have been 100. That might have been 100. All these have worked out, right? So me wanting to take profit targets right here at that region, that's not out of the question, right? That's not anything ridiculous. And I guess what would be even nicer is maybe if the stop was just a little bit closer and the target was here, 1 to 1, right? It's a little bit more reasonable, right? So it's still, you can still participate, but you have to participate with lower risk than you would if you were taking your original trade right at the zone when the initial setup happened at the moment that it's likely to just instantly start moving into profit or not. So sometimes, yeah, like maybe like 20% of the time I'll still take the trade, but I will just risk a lower dollar amount. So in essence, instead of 50K to 100K, right, I'll risk like 25K. That's what you guys see me oftentimes do when I'm like, okay, this trade is still worth taking, but it's not as optimal as I'd like it to be. It's not at the zone. It's not right there inside it where it would be like the make it or break it moment. I could enter and this shit could still like go up into here and just start bouncing at the resistance again. But if that happens, now I'm halfway to the fucking stop loss, right? Whereas the idea would be like it's better if you're just entering there. That's why 80% of the time I won't chase a trade if it starts breaking the zone. So this, Rob, is my response to you with full context, full explanation, and only a tiny bit of gaslighting this time. What do you say to that?
Thank you very much, Nick. Basically, don't take the trade unless you really feel like aping in, and if you do, just risk less.
Yeah, basically. Yeah. Most of the time, leave the trade the fuck alone. Go eat some onion pancakes and
Every day, man. How do you think
every
this happened?
dude, you seriously are looking great, man.
Oh, thank you.
Yeah.
I mean, I need to go to the barber, but yeah.
Yeah, mate, but I think that's wicked, mate. Like I've been growing out my beard. I'm trying to be like you, mate. I'm trying to grow my beard out nice and long so I can pick up those, what do you call them? The chicks from with that heavy accent from England.
It depends what heavy accent you mean.
The ones from the eastern part of England, like Southampton area.
I don't even know what accent you'd call that.
It's a funny name, but it's like they have a thick English accent and it's like it's roasted over there. Anyway, I'm gonna try to pick those girls up with my English accent.
Do you mean
Co-
Scousers?
Cockney. Is that it?
Oh, Cockney. Yeah, okay, yeah, no, Cockney's like London area.
Wow, London has really gone downhill. I mean, no, London's great. I love London. London's great. I don't. I'm not saying anything bad on social media about London. Holy fuck! I'm gonna get arrested by the UK police. They're gonna come here to Texas. Mate, you have been making statements against the English government, and we're here to present you with a warrant for your arrest. And I'm like, how the fuck did you guys get over here? What are you doing? What are you doing in Texas? Cock, Cockney accent. Yes, I'm gonna pick up chicks with Cockney accents, bro. That's the way I'm gonna do it.
Splendid. Well, good luck with that, man.
Yeah. On the real, yeah, my wife would probably get a little bit disturbed by that. I'll bring home a girl that is speaking English technically, but you can't understand anything she's saying.
No, not a word. It is literally a different language. It
Crazy.
was, if you're talking about Cockney rhyming slang, it was invented so that the prisoners could talk to each other without the guards knowing what they were saying.
Are you serious?
Yeah.
Dude, that makes so much sense. I've wondered like how the fuck does that accent develop?
Oh, not the accent. There's a literal language. They
Oh,
they
okay.
change words around. so that, but they've kind of, like you'd say, I don't know, heavy metal instead of kettle, apples and pears instead of stairs, and it's so that the prisoners could speak to each other in secret in front of the guards.
That is wild, dude. I
So,
just the Cockney thing is so wild. Just it's called Cockney.
yeah,
Cockney. But like whenever every time I hear that, and then we'll move on to another question, guys. Um, but every time I hear that Cockney accent, I'm trying to make sure I can share the computer sound in here. Where the fuck is the computer sound? Microphone mode, select the microphone, audio settings, share computer sound. They used to have it really easy to do this, but I haven't used Zoom in so long. All right, can you guys hear that or no?
turn it up, I think.
No, that's not doing it. Okay, fuck it. Anyway, Cockney, cool accent. Can't really understand them, but whatever. It's technically English, so we can't make fun of them or we'll get arrested by the English government. All right. For the rest of you here on this call, we got a lot more people who have hopped on. Y'all go ahead and hit me with your questions. Ask me whatever you like. Again, it doesn't even have to be about trading. I'll answer whatever questions you have for me. Go for it. Unmute yourself and ask. It's great to see you guys are all millionaire traders doing so amazing that you have zero questions. You're like, nah, we're good, Nick. You know, Nick, you might actually want to ask us questions because, we're fucking doing better than you, bro. So you come to us with your questions, Nick. And if we have time, then we'll answer you.
Hey Nick, so I have a question since nobody wants to talk.
Go for it,
Um,
Andreas.
so the EU trade that you just dropped, or whatever you just canceled right now, is that because it's making that downtrend,
Yep. I
or
mean,
what? No, go ahead. Sorry.
yeah, sorry. I actually interrupted you. Is there anything else you wanted to add?
Yeah, so it's just I'm just kind of like reiterating the downtrend. Is it because it's making that downtrend, or is it something that you felt?
Absolutely. Yes, absolutely. That's a simple way of putting it, right? Now, of course, being me, having such a huge ego, right? I'm so conceited and so narcissistic. I feel the need to have to explain myself because of my PTSD from not getting hugged enough by my mom as a child. So I feel like I need to explain myself more. Here's why, man. So first off, Euro USD, the main reason the trade was taken because of this support resistance zone in the daily. Okay. Now, we all know that. I shared the analysis with you guys. I shared it in Telegram. I shared it on YouTube. I even showed my wife. She had no clue what I was talking about, but I still shared it with her. So everybody knows, including my dog and my wife, that I took the trade because of this support resistance zone. Now, whenever we go to examine what actually happened here at this zone, let's look at the story of price, right? We're doing a little nice little medieval English story time right here. Price bounced as resistance on the daily, bounced again as resistance, came up here temporarily, bounced as resistance before surging above. Cool. We did that, came back, bounced here again, made a little double bottom before having a nice little move off the zone. Then price came back to the zone. So we came back to the zone, and then we barely had this little bounce right here. I don't even know if I don't know if I call that a dead cat bounce, right? Just an area where it gets to the zone, barely bounces, and then it immediately falls through. So it bounced here, then it fell through the zone, came back, tried to test it as resistance to go down and make a lower low. But instead of making a lower low right there, price was like, huh, nah, we're going to fuck with Andreas today. So instead of doing that, price just made a little double bottom there. It didn't break lower, it didn't continue down. And instead, price just came right back up above the zone and then it fell back into the zone to test as support. So what I did, as you guys know yesterday, when price came in here and started to test the support again, the idea would be that, all right, we thought it would bounce here at the zone, but now it's failed to break below, right? As illustrated, you guys can see my amazing chart drawings here. I'm trying to make it like a different color. I guess I don't know how to make it a different color. I've been using TradingView for a decade. Can't even change the color of the X. So the idea here is X to show, look, price tried to get below the zone but failed. So that idea would then be to say, okay, this might be a fucking fake out. If it was going to go, it would have dropped right there, right? It would have either dropped instantly or certainly after the retest and bounce, it would have dropped further down. Since that didn't happen and price, in fact, broke above the zone, then came back and tested again and started to bounce, what that makes it look like is, okay, this was probably a fake out. Now we're probably safe to give it a shot to go to the upside. So you'll notice when I called this trade yesterday, um, it was this right here. So I'm long on Euro USD here to support 7:12 a.m. So about 26 hours ago. And thank you for the check marks on the chart. Whoever put check marks on the screen, thank you. I needed that. This way we know that everything is super clear. Very good. Perfect. So what I did is I called this trade right here, and you can see it was that exact point, right? That's why I try to show enough of the chart context for you guys to see it. Sometimes it's H1, H4. It's usually daily, but in this case, I wanted to break up the candle so you guys could see. Price had come below, broke below the zone, popped back above, came back, tested, and then started to kind of bounce here with that little wick, right? I know it's hard to see because it's my MT5 terminal and it zoomed out, but it was starting to bounce there with the wick. So I entered, stop below, target above. So after that, what the fuck played out, right? Let's go through it step by step. Are you still with me, Andres? Still, is this making sense so far?
Yeah. Following.
Cool, man, because this is where the juicy part begins, man. This is the juicy part where the London police comes to arrest you and me for blasphemy. This is it right here, man. Except this isn't a GBP pair, but we'll just pretend like it is. So price is broken above the zone. It comes back, and then we entered here yesterday. Okay, so we entered I'll just draw this little horizontal line. We entered right here after that little bit of a bounce. So now let's look at what the context is. Now, the whole the context to the context, meaning the subcontext, that's even a fucking way to describe it, is that the trade was structured something like that, right? So it's like 1-to-1 risk reward ratio, stop below, target above, this and that. So the idea would be that, okay, if it starts moving into profit, let's just hold the damn trade, because if it starts moving into profit, it's great, perfect, sweet. It's like, leave it the fuck alone, it's working. But the idea is that if it starts to not work and it starts to do some, let's just call it sketchy shit, right? If Euro USD starts to criticize the UK government, then she's going to be getting arrested. But it's not going to be by London police. It's going to be by men, real men like you and me, Andres, and I guess you too, Rob. I mean, your testosterone levels are high enough. We can arrest EU for blasphemy against the English government. So in this case, price did not start bouncing really easily. What happened? Let's play it out nice and slow. We entered, it went into profit, right? I was in 10K profit yesterday. I was feeling amazing, considering putting a down payment on multiple Lamborghinis, as I'm sure you were as well, Andres, weren't you? Yeah.
Yep.
Yeah.
Yep.
Okay. Sweet. It's a natural thing to do whenever we're in a tiny bit of profit on one trade. Just immediately start pre-ordering Lamborghinis. So it went into profit. That was cool. Then it came back. Okay. Came back to the entry, started to bounce a little bit, went a little bit lower into the zone around Asian session yesterday, whenever Asian session started. My time, 4 p.m. Central Standard Time here in Texas. If you're in the UK, it's like 10 p.m., 11 p.m. And if you're in somewhere else in the fucking world, I'm sorry, I don't know all the time frames. But during Asian session, it went deeper into the zone. I held it, and then it started to bounce again. But then I woke up this morning and I found that price was back here at the zone. Okay. So what has happened since we've entered? Since we've entered, price has had this opportunity to go up, and that failed. It then came back. It started to try to go up here for a second, had that opportunity to go up. It failed. Then we came all the way down here into the zone last night, right around Asian session last night. So maybe like 12 hours ago. And then price started to try to go up here, and then it failed, right? Had a little bit of a bounce, and now we've come back. So now we are here at this zone again, but we're having bearish candle closures into this zone, and we're having these series of lower highs, which is what you already kind of expressed during your initial question. You're like, hey, yo, Nick, did you close the trade because it's like making a little downtrend? Basically, yeah. Like it's making lower highs right there. You could call this lower lows, right? I would personally just call that a support zone, right? So it's just banging into the support zone. And a little thing I've coined a couple years ago is like, the more a support resistant zone is tested, right, in short succession like this, the less likely it is to be respected. So meaning the best support resistance zones that are going to bounce, it's going to come in there. And once it gets there, it's going to fucking bounce immediately. You're not going to see this shit where it's like making like lower highs and struggling, right? What this shows is it just shows, for whatever reason, there are just not enough buyers here to fuel a nice move upwards, right? There's not enough buyers here to send it. We're wanting to send it. Lamborghinis, bro, Aventadors, Huracans. We might even get a couple Revueltos, but that's not happening. Price is just fucking going sideways, and it's not really having an easy bounce. When that happens, generally, I like to make the decision, not every time, but like 75% of the time, whatever it is, I like to make the decision to just get the fuck out of the trade and just say, you know what, this isn't working, which is why right here this morning, right, like 30 minutes ago, almost an hour ago, that's why I elected to close this trade. We came here, we started to bounce. I entered. went up higher, pulled back, went deeper, tried to go up again, pulled back, lower highs. And the fact that this is happening, it just means one of two things. Number one, the most obvious thing, which is the reason for closing the trade, is I just think it's less likely to work than it was initially. Because if it was more likely to work, it would have just started to go immediately. We wouldn't see this shit happening. The second thing is the fact that even if this does work out, it's probably going to be a pain in the ass. It's probably going to go sideways for longer. It's probably going to try to fight against all the sellers to move up. It might even liquidate below the zone and make another fucking fake out down there. And now we're having to sit through that or trying to decide if we should close the trade or not. In my opinion, it's better to remove the capital allocation to trades, meaning like just close the fucking trade for trades that don't seem to be working out very easy, and instead to just hold trades that start to work out really easily. Like, for example, AUD JPY. We entered AUD JPY yesterday, right? As price was going up. I know we talked about this at the beginning of the session before I started the recording here, but AUD JPY is just in a straight bull run. We had a nice little clean support resistance zone. Price came here and started to bounce. I'm thinking price is going to continue to go up here anyway and make a new higher high. And then this just gives us a good risk structure. So I entered like whatever it was right there, stop below. Target, I think, was up here. So the trade looks something like this, where I called it yesterday. Look how easy it was, right? We entered and then it just didn't really fuck around at all. It just went straight up to the profit target. And just for those of you who are watching this recording, to kind of recap it, this is where the trade was called, right? ADJPY 4-hour chart. I mean, I used the daily, this is technically a daily zone, but I was showing it on the 1 hour because it paints more texture and granularity. You can see more of the details. But look, we entered right here after it came and bounced at the zone. And what happened afterwards? It just started to push up. There was no quote unquote fucking around. These right here are the best trades. Those are the trades you should hold. Those are the trades you should look to take and then stay in whenever they start to work. Euro USD, on the other hand, is an example of a trade where, sure, this could still work, right? It could still bounce here. And we could be like, oh, fuck, like, we closed the trade early. However, closing trades early like this, whenever they're being a pain in the ass, that is what prevents you from having big losses. That is what protects your account capital, and it allows you and enables you. This trade is an enabler, Andres. It enables you to make more profit whenever you happen to be right versus the amount of money you lose when you're wrong. This trade was a 50K risk. I lost what this morning? 9K, 8,000. I think after the swaps, it was like 9,000, right? So these are all the trades this week. GBP NZD, partial win. AUD JPY is that one that hit the profit target for 30K. And then I gave back basically what I made on GBP NZD, a little bit more on Euro USD. This was a 50K risk, right? This was closed about 20% of the way, or 1/5 of the way to the stop loss. And the reason it was closed was because of what your suspicions already were, Andreas. It had started to make lower highs, started to go sideways, was kind of fucking around. And I thought it would be a better idea to get out of that trade, remove the capital allocation, and then allocate that potential capital margin and leverage to another trading opportunity whenever it happens to set up. So that way we can profit on the ones that are working and then get out and run away from the ones that are not working. What do you make of that, my good man? What is your response?
No, yeah, it makes a lot of sense. And usually I try to double check your trades. Just I wanna you mentioned one time that you like to trade with your emotions, and that's the same way I like to trade. So if I feel like I like it, just like you like it, then I'll take it. And then yeah, I was kind of feeling iffy about it. And when you said you were gonna drop it, I was like, yeah, me too. I was right there with you. So
Perfect.
yeah, thank you for the explanation, man.
No problem. That shows something very interesting. Number one, it shows that you're thinking rationally, which is great. But number two, it shows the idea that you're willing to be realistic about what's happening, because like like, hey, if I'm right, it's going to start going right. If
Hmm.
you're wrong, it's going to start going against you. If you're right, it's going to start moving towards the profit target. So you recognize that, and because you recognize that, it's starting to build up this feeling, this sexy feeling you have inside you that we just call intuition,
Yeah.
discretion, price action discernment, accounting for the context, right? Whatever way you want to call it. It's that little fucking feeling, those sensations you get where you're like, wow, like, you look down, you're no longer erect for the trade. You're just like, this trade looks like a piece of shit now. I'm going to get the fuck
Yeah.
out of this trade. So you're starting to develop that, and that intuition, that discretion, they're able to manage those trades based on the context. That is where most of the edge lies in manual trading. Some people would disagree with me, and some people would say, Andres, you're just trading with emotions, bro. You just close the trade because it starts going sideways. Really? They're going to call you a pussy, but those same people are going to be fucking blowing their accounts using
Yeah.
microbots on $100 account. You're going to be
Yeah.
trading accounts like hundreds of thousands of dollars, and like just closing trades that aren't working and holding trades that are working. And you're going to do it again and again and again until we can both order matching purple Revueltos or the Temerario if that's your thing.
Yeah. And well, I gotta cancel that wrap for that Lamborghini and the Lamborghini because it didn't work out. But thank you, Nick. It's all thanks to you. So appreciate it.
Absolutely, man. Always here to help. And I'm happy that you're making progress. That is something to be proud of. I am personally proud of you, Andreas. I'm
Thank you.
I'm, I'm going to send you a gold sticker in the mail and you can wear it on your shirt.
I'll put it on my forehead. Looks better.
Yeah, good shit, bro.
Thank you.
Yeah. All right, we're opening up the mics for another question. If you have a question, unmute yourself and ask me. It could be a question about anything. Trading is cool. You can also ask me a question about anything you want, and I will sit here and I will help you. I'm waiting. I'm anxiously waiting.
Morning, Nick. How are you?
Amazing. What's up, bro?
Hey, just a question for U.S. clients on brokerage. I find that's hard to get good leverage, which I think you've addressed in the past. And then second question, just a little bit of advice on your stops. Do you find another area that you put your stop below, like another support or resistance that you put your stop past, or is it just strictly arbitrary for you?
Yeah, okay, sweet. Like pretty good questions. All right, so when it comes to brokers, I've been fucked over by brokers so many times over the years that I just stopped talking about brokers just because I don't know. I still haven't figured it out. It's been like a decade. What I do right now is I have a broker that is based in Australia. Actually, that might be based in New Zealand. It's one of the other, Australia or New Zealand. What I do is I have a person from the UK who facilitates me being able to use that broker. So the account's not in my name, but I can still fund it with crypto. I have another broker that I use. I'm not going to say it's VT markets or Vantage markets because I just don't want to say I don't want to affiliate myself with them. But I have another broker that I use as well that has been really good and that I can do like bank wires too. And that's not under my name. That's under the name of a holdings company that is owned by a person in the UK. So the way I structure it is if you're the US client, you can't like, I mean, unless you're using some really sketchy degenerate broker, which I mean, it's not completely a problem as long as they A book you from the beginning, but that means you have to trade profitably from the very beginning. If you join a broker, whether you're using a demo account or a small live account, and you start losing money instantly, right? They're going to keep you on what's called the B book, meaning they're going to just take your deposit and just pocket it, knowing you're probably going to lose the money. And then when you lose the money, which is going to happen 90% of the time for most people, because 90% of people lose money trading, what they will do is they will just pocket your whole deposit and they make the profit of whatever your deposit was. So you put $1,000 with them, they keep it, they give you an account saying it's live, but it's actually a demo account, and then you lose that $1,000. Now they've made $1,000 from you. If they were only making money through your commissions and swap fees and a little interest they charge you, whatever other fees they have, they would make maybe a tenth of that, right? They might make 50 to $100 on you. And if you go and lose the money, okay, sweet, you lost the money in the market because they were actually sending your orders to market. You were a booked. They were sending your orders STP, ECN to the actual interbank to send it into the market. And then if whatever profits or losses you make come from the actual market, instead of it just being a demo account. Because if you make profit, but you're B booked, they have to pay you out of their pocket, which is really scary for brokers. So the thing is unregulated brokers can work, but I've run into so many issues, like the issue that I went through back in 2020, I believe it was 2024. There was a 6-week period. I made $183,000 on my account with them. I ended up having close to $400,000 with that broker. They randomly sent me an email one Sunday in the summer of 2024. I think it was June. A lot of you guys who have been here in Nick's Trades or close friends for a while remember this. They sent me an email saying, "Hey, we've removed your MetaTrader license, so you cannot trade with MetaTrader 4 or MetaTrader 5, and there's currently no other options we can offer you to trade on your account." And my account rep on not Telegram, WhatsApp. My account rep on WhatsApp would not message back. They would not respond to the email request, like nothing. So they tepidly, indirectly banned me from trading with them. And that was an unregulated broker. So that's the kind of shit you have to deal with if you're using unregulated. Your only other option, my good friend Joseph, is to just use a US regulated broker. But if you do that, it comes with its own host of, I don't want to say problems because they're not problems, but they are issues that really impede profitability. For one, the leverage is so fucking low. They say 1 to 50, right? Oanda, Forex.com, IGUS, all these brokers, they say 1 to 50. The reality is like, for example, with Forex.com, you only get 1 to 50 leverage on, I believe, 3 Forex pairs. The rest of them's like 1 to 30 and under. And on certain JPY pairs, you get like 1 to 10 leverage, right? You can have a 100K account and you're having to trade that account like it's like, a 5 to 10K account because of how small your positions are. It prevents you from being able to risk what you want to risk sometimes if your risk is high enough. And it also prevents you from being able to enter other trades if you've already used up all your margin. And so it becomes this huge pain in the ass thing, not to mention the really high commissions and fees and swaps and stuff like that. So US brokers, the only upside though is that it's regulated. So if they fuck with you or take your money and just say like, oh, you can't pay you out, whatever, you just go to regulators. And since they're regulated, they have to respond to government authorities. So, in the UK, it's the FCA, in the United States, it's the CFTC. In some cases, you can go to the FTC, but it's usually better to go to the SEC or CFTC here in the United States because CFTC oversees like Forex trading and futures. You can do that, right? So you can get your shit back if they try to fuck with you or anything, or they do anything sketchy. You can't do that with unregulated brokers. So there's pros and cons to each. And your position, Joseph, and to all of you guys listening, what I would do is I'll experiment with a broker by start using an email address that's not like it's not your real one, right? It's just a burner account. Go and trade with that broker on demo for a while. And then whenever you believe you're profitable, then start an actual account with them using your actual email. And then what you can do is you can trade, but just make sure you're trading profitably. It doesn't matter if it's a demo or live account because their risk desk is going to look at all your metrics, P&L and everything, and they're going to determine whether or not they think you're likely to be profitable. And if you trade profitably for a couple months, if you were on B-Book, they're going to move you over to A-Book and send your orders to market. That way they will actually have money to pay you and they won't have to pull it out of their pocket and they won't pull like sketchy shit when you try to withdraw. Like say you grow you grow $100,000 account like to 150K. So they owe you $50,000 in profits plus your deposit back. If you're not A-Booked, right, they're having to pull 50K out of their own like holdings. And oftentimes what you'll run into is you run into issues with that. They'll send you like emails. Like I've got emails before from one broker saying, we're investigating you for anti-money laundering. And so we're suspending your account for 90 days and holding your funds pending an investigation. And I'm sitting here like, wow, all I did was trade profitably. And they're saying that I'm laundering money. So you run into shit like that. So if you're going to be using an unregulated broker, I highly suggest only start the account like with your real email address and real name and stuff. If you know you're likely to be profitable, and it doesn't matter if it's demo or live with that broker, it's all connected to your account. If you can trade profitably, they will be unlikely to put you on B-Book or keep you there. They'll move you to A-Book. Then you really won't run into a lot of issues unless you start trading higher balances, like hundreds of thousands of dollars. Like if you have like 300K, 500K or more with the broker, they're going to be really keeping a close eye on you. And they don't like unregulated brokers. They make most of their money from people losing money because most of them are B-Booked. It's just the reality. And they don't like people who are trading profitably. So it kind of sucks. It's hard enough to be profitable in the beginning trading. And even if you are profitable, now you have to worry about a broker fucking paying you out. So that's my suggestion, Joseph, is just experiment with different brokers, whether they're regulated or unregulated. If you're trading a regulated broker, you'll just have to use really tiny position sizing. And if you're doing unregulated, you'll have to make sure you can trade profitably from the get-go. So we'll move on to your next question about stop losses. But first, I'll hit the pause button here so that you can give your comments, questions, any follow-ups you want to ask about the broker situation. What is your response, Joseph?
Oh, that's good. I've been using Forex and just realized that it's such a low leverage. It's a little frustrating. So just look at other options.
Sweet, man. Good shit. All right. Just to make sure I can properly answer your next question, if you could just re-ask it so that way it's fresh in my mind.
Yeah, just a little bit more guidance on your thought process on where you put your stop loss. Like, are you looking for another, support or resistance area? Or I find oftentimes my stop is either too big. And so then obviously my one-to-one look is quite big. And then when I lower it, then if I'm closing it as it drops below a support or resistance, it's a much higher loss. So just that balance that you're finding between that process.
Sweet. It boils down to just simply saying like you don't want it too close and you don't want it too far. Now I get it. Now what the fuck does that mean? We're gonna go to the charts. We're going to look at it. But instead of me telling you exactly what it is and how to do it, we're going to show you, right? I'm going to show you the step-by-step process so we can derive it. And you will see not only what to do, but you also see why and what the logic is behind it. Fair enough?
Fair.
Okay, sweet. So let's say that we're about to enter, which I personally am, USD Canadian dollar, right? So we're saying, okay, we're here on the daily. This is the zone where prices bounced a couple times before, right? It looks like a pretty clear support resistance. We've got this little bit of leakage below the zone, but aside from that, resistance here, support there, dipped below it. And now we've found resistance a couple times. So it might be bouncing here. So if we're going to enter this trade, let's start by deciding where should the entry be? And I mean, you tell me, just tell me looking at this chart, where should the entry be?
Yeah, we're looking at kind of that middle zone.
Perfect. So we'll be entering, super, super complicated. I know. Just be entering in the zone. Enter a sell inside the zone. Okay, sweet. And of course, this is accounting for the context, not to make it complicated, but we want to let it come into the zone. We want to see it kind of pop away a little bit first, right? So something like this where it gets into the zone, and once it gets there, it starts to kind of like tug away a little bit. You want to see that first because that'll prevent you from getting into trades where like a news spike just takes it directly through the zone and then it doesn't bounce there at all. So let's say, gets into the zone, then it starts to bounce away. So we're wanting to enter somewhere in the zone, right? Somewhere generally at least towards the middle of the zone. So you've got that part. So now this is the juicy part of your question, my good man. Like my good man, Joseph, the Israelite, the goat herder, Joseph. We are going to decide where to put the stop losses. So for me, I'd probably put the stop loss like up here just because it's not too far away. So I'd probably put it up here just to give it some room. This would be about 1,400 pips. Make sense?
Perfect.
Cool. So realistically, what we'll do is you tell me where you think the stop loss will go, and then we'll drag it into place, and then we'll just see. You tell me when to stop. I go real slow here.
Yeah, I'd put it around by that recent high, that swing high. It's kind of where I would put it.
This one?
Yeah.
Cool. All right, so let's talk about it. Now, first we need to understand the logic behind the trade. The logic behind this trade is that if price comes here and it bounces at this zone, the idea is that it's going to be that it's not really going to go far past the zone like that, right? It's not really going to like spike all the way up here and do some stuff like that. So the idea would be, let's make sure that we're setting our stop loss at an area where the trading idea becomes invalidated, and then give it just a little bit of room on top of that. So from the beginning, because you laughed whenever I said, I put the stop loss up here, bro, 1,000 pips away. That's a bit ridiculous, right? Yeah.
Yep.
Yeah, just unnecessary. But if I told you we're going to put the stop right here because it's just above the zone, you would feel a little bit weird about that, wouldn't you?
Yes.
Yeah. So what you've elected to do is say, let's put it above the recent high. That's cool. Nothing wrong with that. However, what it's going to do is it's going to increase your trade duration. And also, as you already said, the 1-to-1 becomes something like it has to make a new fucking low and knock out the recent lows just to be able to hit your target. Okay, cool. It means whenever his price goes above and breaks the zone, like you'll be able to take a smaller loss, sure, but you are limiting some of your upside profit potential. What I like to do is I don't use any other shit. Like I don't look at any other price action. All I'm looking at is the zone. So I'm looking at number one, is the zone super, super clear? Assuming that's the answer, because the answer should be yes if you're going to be taking a trade off of it. Assuming the zone you're entering on is very clear, we're going to put our stop loss just past the zone. We're not going to put it way up here, but we're also not going to put it like that. We're going to put it just far enough away where if it does start to break the zone, we can still manage the trade, right? We can still get out of it, but also just far enough away to where if price just does a little spike like this deeper into the zone, even if the spreads are high at that time, right? Even if it's Asian session changeover or something during that time, or it's the weekend, we get a gap or something, we don't want to get stopped out if price just comes and tests the zone, right? If something like that happens, we don't want to get stopped out. So we want to have our stop loss a little good distance away from that. Your original idea was to put it here above the recent high. Again, there's nothing wrong with that, but just remember it's not necessary. It's not necessary to do that. All you're looking at is, not even analyzing the previous highs or whatever. Just look at the zone you're trading off of and set your stop loss for one on the other side of it, but it doesn't have to be too far and it doesn't have to be just above. Just set it far enough away from the zone where if you're right, it's going to bounce here. It's not going to fuck around a lot. And then your profit target is going to be like that, right? Which is a hell of a lot easier. It doesn't even have to get to the previous lows in this case, right? It just has to have a little bounce away and you're out at your profit target. But if it does start going against you, you can still manage the trade, get out at break even or a third or half of the way to the stop loss. Again, this hinges on what I said originally, which is that you don't want it too far or too close. What is too far or too close? Look at just the support zone you're trading off of. Don't account for anything else in isolation. Just look at the support resistance zone you're trading off of. Set the stop far enough away from the zone where if you're right and price goes a little bit against you, you're not going to get stopped out, but it still gives you room to close the trade a little bit early if it does start going against you. Now, I know this is subjective. I know it's dynamic. I know it's nuanced, but does this help?
Yeah, absolutely. I appreciate it.
Sweet, man. Yeah. And then your profit target is dragged to 1-to-1 and you manage it. This will shorten your trade duration and it'll give you a little bit more reasonable of like where your stop should be. So that way you're not setting stops like, 500 pips away, shit like that. All right, sweet. Joseph, you are all set, my friend. So we will continue on. If you have a question, we'll continue the next question. If you have a question, unmute yourself and ask me. We've got a nice little crowd here today. I'm waiting. I'm waiting anxiously. Unmute yourself and ask me your question. If you have one, and we'll talk about it.
I'm surprised Kirkland's not there with you in your house.
Kirkland's been salivating trying to come here to record another YouTube video so that we can gaslight each other in the intros. But I had a lot of tax shit to do yesterday, and I've also got a lot more tax shit to do yesterday. I finally finished my corporate return, but now I'm having to do all everything for my personal return. So I have like meetings with my CPA and shit. It's just a boring day. I hate taxes. 62.7% of my income gets taken from me in various forms of taxation. And you'd also be really resentful when not only your money's taken, but when you have to take the time to like spend hours and hours and days and weeks doing your taxes to then just give the government like over half your income. You can understand how it would make a man feel really bad inside. But Kirkland, what is he doing? Yeah, it looks like Kirkland's at home. There he is. There he is.
Yeah, I'm at home. I just got back from the gym.
It's good. Which gym did you go to?
LA.
LA, man. Awesome.
Yeah. About to make some Kodiak pancakes.
Get some protein, some carbs, get some fats, get some fiber, get all your micros and macros and get jacked, dude.
Hell yeah.
Jacked, bro.
Oh, I have a question.
Yeah, lovely.
How do you place a trade on MT5?
Let's go ahead and just kick Kirkland off the call. We're just gonna go ahead and click ban. Silly boy. Sweet. All right. I'm gonna go do my normal analysis as I normally would. I'm gonna finish that up. And then if we don't have any more questions in that time, I'm just gonna hop off the call. I'm gonna stay on as long as you guys have something to ask me. And if you don't, I'm gonna just piece the fuck out. So I'm gonna go through my analysis. If you have a question, just unmute yourself and ask me. I will help you with whatever it is. Oh, just for the record, Rob, are you going to be entering Euro GBP? Are you going to be pussying in? I mean, taking a logical, rational trade with good risk structure.
I'm gonna ape in 100% the account and just go for like 3 pips. You know,
Dude,
it's all or nothing, dude.
I have
Onion pancakes, high test, all in.
I've never heard of a better risk structure. Just all 100% of the account risk going for only 3 pips. You could close it halfway to the stop at 1.5 pips, and then you'd only lose half your trading account. All the money you've worked so hard to make, FOMOing in with a 3 pip stop.
Exactly.
On Euro GBP, which moves very slowly and has higher spreads and lower leverage. That just sounds like, that sounds like so much action, man.
Yeah, that's how I roll, man. You know, that's how real men trade. You'll learn it one day, Nick.
I will, man. I'm gonna come to you where you're gonna host these calls, and I'm gonna ask you questions. Be like, "Hey, Robert, how do I take the trade, Robert?"
Yeah, exactly, man.
Realistically, I don't know if I will take this trade in parentheses again, but she looks decent. Decent. Not amazing. Decent. We'll see. Euro USD. Euro USD. We closed a bit ago around the entry about one fifth the way to the stop loss. She will be breaking lower. A client on our live session this morning, client named Andreas, had a client on our live session this morning who asked about closed early, and I upload the live sesh recording to YouTube so you can see why we closed early. Full breakdown. Oh yeah, GBP CAD has set up too. Shit, how do I feel about this one? Let's take out this little retarded zone here at the bottom. Price is nowhere near that. I don't know how I feel about this, honestly. It looks kind of sloppy. This zone looks a little bit sloppy. I think I'm gonna pass on GBP CAD. GBP CAD is technically set up already. However, I think the zone looks sloppy. And I'm not liking the rangy price action here. Probably won't be trading this setup. GBP NZD. Wow, she's really struggling here at this zone. We were short on this, closing a little bit of profit earlier this week, as you guys know. 7K. But I don't know. Just looking kind of weird. On the daily, I almost feel like she's going to break higher. Refusing to go lower. Looks like we're out of the little downtrend. Just no longer like really following a nice little downtrend. Looks like we're making higher lows. We might go to the upside. So probably going to wait on that one. GBP USD looks decent for drop. GBP USD can drop, sir. AU nothing. AJ. Still think she'll go up, but I don't know. I don't have an entry here. I don't want to enter off these highs. Kind of a little bit sloppy, a little bit too much of a micro zone. NZD USD. This is one of them that looks like she's going to go down. But how to enter? Where the fuck does the stop go? If we sell here at support, selling at support, Rob, if we sell here at support, where does the stop go? Above the recent high? Well, it needs to go above a recent zone. Is that a zone? I don't know. A very sketchy zone. Not really see a clear risk structure here. What I would like better is if we did, in fact, have weakness by breaking below, then we just come back and retest it. And if we start to kind of bounce during the retest, that would be a good short trade. That's what I'll be waiting for. Go ahead and send this out in the Telegram. Anything else? CAD JPY nothing, EJ nothing, Euro CAD nothing, still ranging. USD JPY. I'm gonna look for this right here, the resistance to take sells. Very simple. I know it's on the hourly. Let's go to the daily. I'll show you. For this right here. That zone there. Pretty nice, clean, cut and dry. I think we even took a trade on this at some point last week. Not last week, but a couple weeks ago. I don't know. I can't remember. Did we take this trade? I think we did. I think we took the trade and it worked out nicely. Waiting for sells on USD JPY here at this res zone. Have an alert there. CHF JPY looks like we'll be moving to the upside. Set an alert at the high and see if we might bounce there. I'm less likely to take a trade here just because I mean, trend, trend is your friend, bullshit like that. So trend is okay to take into account, but just not like take it with a grain of salt, meaning like I don't give it much relevance because even if something's in a trend, you'll still see bounces at support resistance ends. And unless you're trying to target the moon and be a hero, you'll still get little bounces at support resistance zones, even if price is like in a downtrend, right? If you think like, no, it's in a downtrend, bro, it only take sells. Well, it's like, you're missing opportunities like that and like that and like that and like that before it finally ends up breaking, right? You still could have made profit on at least one or two of those opportunities. So that's why, yeah, I look at the trend a little bit, but like, when I see CHF JPY, I'm like, this is a straight bull. It's a straight bull run, and it has been for years, right? It's going back here like past 4 years, it's been going up. I might sell at the resistance, but I don't know. I don't know. We'll see. Closing up, USD CHF. I'm not going to be taking this. It's too small of a zone. I think USD CAD and USD JPY looks better. AD CAD, nothing, no clear zones. NZD JPY, nothing. And Solana, this bitch continues to play with my emotions. I'm down like 900K in crypto over the past, like, I think 5 months since October. So what's that, 5-6 months? We're coming here about to be in March. Painful. I made almost 2 million last year from crypto alone, plus Forex, plus stocks, plus, whatever Mission FX did. Solana has taken back like almost half of what I made last year. But I think it'll come back up. And my position average on Solana is really low. It's like 137 or 138. So this right here is my average position. So price could just get back there. I will have back 900K that I've been down. The price has to basically double to get there. Well, 80%, so almost double. I think personally, Solana, whenever we do have a bull run, it'll go really nice, like back to 200, 250, maybe even crack the highs. We'll see a higher high to 300, 350, 400 even, maybe. But for now, I'll be watching when price gets back there. All right, that's all my analysis for today. Super easy, super clean, super simple. Any questions before I hop off, my good friends? This could be the last live session we do for a year. Just kidding. We'll do another one.
Actually, I have a question. I don't know, maybe you mentioned it before. Does crypto work or does it work similar to all these like Forex where like you just try to get like a resistance like day trading?
No, it does not work similar to Forex at all. It works identical to Forex and stocks and futures. And dude, soybeans, bro. You gotta trade soybeans. That's what you gotta. Forex is stupid, bro. Futures is retarded. Equities is stupid. Crypto's for idiots. You gotta go trade soybean futures contracts, man. That's where it's at. Yeah, it all works the same, man. It's all based on price action. Like price goes up and down, price bounces at previous highs and lows. Remember, support resistance is it's not so much a strategy as it is a method of controlling risk. It's a way of saying like, okay, price gets to this arbitrary region, arbitrary region I've drawn on the chart. And then it's either going to do one of two things, right? It's probably not going to go sideways forever right there. It is probably either going to bounce or break. So support resistance gives you a way of controlling risk because it shows you three things. Number one, it shows you where can I enter a trade? Well, at a support resistance zone. Great. Number two, it gives you a way of saying, where do I set my stop loss and how do I decide what I risk? Well, it's based on your risk tolerance. Risk $100, $10,000, $50,000 like me. And then you have a clear location for setting the invalidation point, which is just on the other side of the zone, above a resistance or below support. So now you've got those two things, the entry, the stop loss. And then for your target, right? Target's basically already set. You just drag it to 1-to-1. If it goes into profit, you try to hold it there most of the time to 1-to-1. And if it starts going against you or going sideways, you look to exit a little bit early, just like we talked about on our Euro USD example. Does that make sense?
Yeah, totally. Yeah, okay. Yeah, thanks.
Good shit. Well, without further ado, my friends, I'm going to hop off this live session. We'll probably do another one at some point this week, maybe next week. Might do like one of these a week. We'll see. And good questions today on the call, guys. I really enjoyed this. Hope it helped. Thank you, Jim and Tara. Thank you for the heart. Thank you, Zoom user, for the heart. I appreciate. Appreciate everybody sharing all the love. Oliver, whoa, thank you. Round of applause for Oliver. Robin, thank you for the heart. Everybody sharing hearts now. Kirkland, you got to at least make it with your hands, bro. Give me a heart, bro. Come on, let's go. Rob, anyone at this point. Anyone at this point. Show me love. Love me. Andrev, Richard, or Robert. Thank you, everyone. Okay, sweet. All tough, good, girl. I'm happy you're doing well, girl, over there in Kuwait. I will see you guys at a later time. Probably pretty soon. iPhone, thanks for the heart. Sweet. All right. Oliver, got the dick emoji. Ha! Getting excited here on these calls. We're getting too excited here. All right. I'll see you guys later. Y'all have a good one. Talk to you soon. Cheers. I love you all. Bye. Mwah.